Iraqi banks are under real pressure right now. And if you are holding dinar or just watching this currency out of curiosity, you need to understand what is actually happening before you believe the next big claim you see online. Welcome back to Iraqi Dinar Brief, the channel where we cut through the noise and give you the facts, calmly, clearly, and without the wild promises you find on other channels. Today we are looking at the pressure building inside Iraq's banking system, why it is happening, what the Central Bank of Iraq is doing about it, and what this actually means for the value of your dinar. No hype, no countdowns. Just the story as it stands right now. Let's start with the core issue. Iraq's central bank has reported that its reserves have declined over the past several months. Officials have confirmed that the reserves sitting with the central bank now stand at a lower level than they did a year ago. And at the same time, the bank's liabilities to the government have grown. That is a meaningful shift. Reserves are the cushion that backs the currency and keeps the exchange rate stable. When reserves shrink while government obligations grow, the central bank has less room to maneuver, and that pressure eventually shows up somewhere. Whether in tighter access to foreign currency, slower transfers, or new rules for banks and exchange offices. At the same time, a large amount of physical cash is sitting outside the formal banking system inside Iraq. This is not a new problem, but reports this year suggest it has grown into a serious concern for policymakers. When billions of dollars worth of cash circulate outside banks, it becomes harder for the government to track spending, harder to fight currency smuggling, and harder to manage inflation. It also means the government collects less in fees and taxes tied to formal banking activity. In response, Baghdad has been working on a cash recovery plan, encouraging both individuals and businesses to move their money back into licensed banks. This is one of the clearest signs that the government is trying to strengthen its grip on the financial system, not because collapse is coming, but because a modern economy simply cannot function well with so much money sitting outside formal channels. On top of that, the Central Bank of Iraq has been tightening its rules around foreign currency. For years, Iraq has run a daily dollar auction system, where banks and licensed money exchangers can request US dollars to support trade and personal transfers. This system has been a target of criticism because it has historically been vulnerable to fraud, fake invoices, and dollars leaving the country for reasons that had nothing to do with real trade. Over the past year, the central bank has introduced stricter documentation requirements, tighter vetting of exchange companies, and closer monitoring of where these dollars actually go. Several exchange houses have lost their licenses. Some banks have faced restrictions on how much foreign currency they can move. This is a direct response to years of pressure from the United States Treasury, which has pushed Iraq hard to clean up its currency auction system and prevent dollars from reaching sanctioned parties, particularly neighboring Iran. For everyday dinar holders, this tightening is not a sign of currency collapse. It is closer to a cleanup effort, one that has been years in the making. There is also the matter of regional instability. Disruptions around the Strait of Hormuz earlier this year affected oil shipping routes. And since oil exports are still the backbone of Iraq's national income, any disruption to that route puts pressure on government revenue. Iraq has responded by activating alternative export routes and border crossings to keep trade moving. And officials have said publicly that they are working to protect the country's income streams despite the regional tension. This matters because Iraq's currency stability is closely tied to its oil revenue. When oil income is threatened, even temporarily, it adds one more layer of pressure onto a banking system that is already dealing with reserve declines and cash management issues. Now, let's talk about something you have probably heard a lot about if you follow dinar communities online, and that is the idea of removing zeros from the currency, sometimes called redenomination. Iraqi officials, including members of the Federal Supreme Court, have discussed the government's constitutional authority to move forward with this kind of currency reform. To be clear, redenomination is not the same thing as revaluation. Redenomination means reissuing the currency with fewer zeros on the notes. So instead of a 25,000 dinar note, you might eventually see a 25 dinar note. The value of your money relative to the dollar does not automatically change, just because the number of zeros on the paper changes. It is more like a cosmetic and administrative reset, similar to what Turkey did with its lira years ago. or what several other countries have done to simplify their currency and reduce the burden of dealing with extremely large numbers in daily transactions. It can make the currency easier to use and can be part of a longer economic modernization plan. But on its own, it does not mean your dinar suddenly becomes worth dramatically more in dollar terms. This brings us to the exchange rate itself, which is the number most dinar holders actually care about. For the 2026 and now the upcoming 2027 budget planning, Iraqi officials have reaffirmed an official exchange rate in the range of 1,300 to 1,320 dinars per US dollar. This rate has been largely unchanged for an extended period, and budget documents reaffirming it are a normal part of government financial planning. They are not an announcement of a new, higher value for the dinar. It is important to separate government accounting decisions from actual currency market moves. When a government publishes a budget using a stable rate, it usually means officials expect stability, not a dramatic revaluation. There has also been continued financial cooperation between Iraq and the United States, including cash shipments from the U.S. Federal Reserve to the Central Bank of Iraq, to help support dollar liquidity inside the country. This kind of cooperation has been ongoing for years and reflects the close financial relationship between the two countries, largely tied to Iraq's oil trade and its use of the US dollar for major transactions. It is a sign of continued partnership, not evidence of an imminent currency shift. So, what does all this actually mean if you are holding Iraqi dinar or thinking about it? It means Iraq's banking system is going through a real period of adjustment. Reserves are under pressure. The government is trying to bring more cash back into formal banks. Regulators are tightening the rules around foreign currency to fight fraud and meet international standards. Regional instability is adding extra strain. And there are ongoing conversations about modernizing the currency itself through redenomination. These are all real, documented developments. What is not happening, at least not based on anything confirmed by the Central Bank of Iraq or the Iraqi government, is a sudden revaluation that would make the dinar worth dramatically more against the dollar overnight. That idea has circulated in online currency communities for many years, often promoted by people with no official connection to Iraq's government or central bank. And it has never materialized in the way it has been described. It is worth staying skeptical of anyone who tells you a revaluation is guaranteed or imminent, especially if that claim comes with pressure to buy more currency quickly. If you are already holding dinar, the most useful thing you can do is watch official statements from the Central Bank of Iraq. Follow the country's budget planning process, and pay attention to how the banking sector reforms actually play out over the coming months. Treat currency speculation the same way you would treat any other investment claim, with healthy skepticism and a demand for verified sources. This is not financial advice, and any decision about buying, holding, or selling foreign currency should be made carefully, ideally with guidance from a licensed financial professional who understands your personal situation. That is where things stand right now with Iraq's banking pressure, and what it means for the dinar. We will keep tracking the central bank statements, the government's cash recovery plan, and any real updates on the exchange rate as they happen. And we will bring them to you the same way we always do, straight and without exaggeration. If you found this update useful, consider subscribing to Iraqi Dinar Brief so you do not miss the next one, and drop a comment letting us know what part of this story you want us to dig into next. Thanks for watching, stay informed, and we will see you in the next update.